Hello, everyone, and welcome to another episode of Traders Talk, the place to be to gain all the latest expert insights into some of the hottest topic affecting traders right now. My name is Jitan Solanki, and I'll be your host today and be sharing with you my 15-year macro trading experience. And I'm also joined here by special guest star Paul Wallace, professional trader and also host of the Admiral Market Spotlight webinar series. So, Paul, absolute pleasure to have you on the show today.
Good morning, Jitan. Good morning, everyone. Yeah, it's a pleasure to be here. Looking forward to an interesting chat.
Yeah, no, definitely. Yeah, really looking forward to tapping into your years of experience into the markets. And I think there's some really interesting things happening in the markets so far this year, actually. It's been pretty busy. But one of the key topics we're going to be covering today is just the raging bull market we're seeing in US indices. Forget the coronavirus, forget Trump impeachment. This thing just seems to keep on going up. And we're going to be sort of talking about that, but also some of the things that it's affecting, such as the uplift in some individual company share prices that we've been seeing. So we'll be touching upon Tesla a little bit later on, which is absolutely incredibly tripled since October 2019 and doubled in 2020 this year so far. But first things first, what's going on with US indices, Paul? Beginner traders will turn on Bloomberg, CNBC, look at the news, fear mongering everywhere, coronavirus, Trump impeachment, end of the world in certain places, and yet this thing just keeps on going up. Any insight?
I wish I had the exact answer for that, Johan, because it has just been it's been madness really this year. Even if you just keep it to 2020, it's just been absolutely astounding. As you say, the market just has shrugged off what has been a series of quite important geopolitical sort of events from Iran, as you say, from Trump impeachment, Brexit to now coronavirus, and these American markets are just effectively shrugging them off and just chugging north. They just keep continuously sort of grinding their way north, and it comes down to that old adage, that old trading adage of don't trade what you think, but trade what you see. And it's just been a case of, these markets are grinding north, and regardless of your own personal views, it's a case of, you don't really want to be fighting that kind of that surge that we've been seeing over these last few weeks and months.
Of course, yeah. And I think when you're a seasoned trader, like yourself and myself, it's kind of easier to, I guess, to go with the flow, so to speak, to go with the trend. Of course, for beginner traders, it's a little bit more challenging because it's always, when you're flat in the market, you're thinking, is it going to keep on going higher? Because naturally the human mind is geared to not believe in things that are going to continue to keep going up. So any sort of tips for beginner traders in terms of how to deal with US equity indices right now and how to actually trade it?
Yeah, it's you're absolutely spot on, right? When you're sat on the sidelines, you are worried that is this trend going to end? Okay, and that's to be fair, that's a perfectly human emotion. All traders will look at that and think, but it really is a case of as I said before, you have to trade what you see, and I openly admit I have a bearish bias at the best of times. Okay, I know that from my own trades that I love shorting any instrument really, but it is a case of regardless of what I think, it doesn't actually matter. You have to trade what you see, and whilst those indices are moving together in unison, certainly those kind of US indices, well then it's a case of just you're looking for an opportunity where where can you engage in this market, where are the either levels that would seem natural pullback points that a trader could sort of join that trend, yeah, or are there particular levels or ways that you could trade a particular a breakout to new highs if that is your preferred way of engaging with markets?
Yeah, and I think that's the key thing, isn't it? Knowing what your style is. Okay, is it more end of day? Is it more intraday? And also within that style, understanding the difference between technical analysis, fundamental analysis as well. What weighting you're going to put between those. And I think for me personally, when I look at US indices, so a lot of people can trade US equity indices as well, and you can speculate on the price direction of the actual index. But I think there's also another additional advantage of looking at these US equity indices, because the positive risk sentiment we're seeing with people just continuing to be bullish or buying American stocks and the stock market overall, is the fact that that sentiment also helps lift individual company stock prices. And I think for me, one of the best places to look is where you have the US indices going up, which they are right now, but also when you can find specific companies where they can also push higher as well, based on specific company valuations or fundamentals or news or whatever it may be. And it's that combination which I think can be quite powerful, and we've seen that in Tesla as well. And I mean, I'm just going to show people a chart very quickly of just what it is we're sort of seeing right now. And here's just a chart of the NASDAQ 100 that I'm showing right now. So it's clearly just going up. And I just want to quickly show a chart of Tesla as well, which we can see has just had a phenomenal move higher since October 2019. And I think Tesla's a great place to start, because there's a lot being said about it right now in the media. And I know you were looking at Tesla at the beginning of the year, and I mean, have you got any insight in just in terms of what is going on in Tesla right now?
Yeah, I think if you don't mind, just to make a point on what you talked about in terms of those indices being just powering north and the effect that they have on kind of US individual stocks. If I could just add to that, Jitan, is the case that we are in some ways we're quite privileged that we work in UK in the West, and so we have access to markets. Whereas what we perhaps forget is that when you go globally, it's a case of some of those markets don't look anywhere near as attractive. And if you're a fund manager sat in somewhere like Buenos Aires, okay, or Lima or somewhere like that, and has to look for somewhere to put their money to invest. But when you look at the world at the moment, you have to look at, well, where would I put my money? Where would I put my money? And with everything that's been going on in the world, it does kind of come to, well, effectively, the US stock markets are still the place to put my money. So, regardless of what anyone else might think, when the whole world and its wife is looking for a place to put its money, those US indices still remain enormously attractive. And so we still see that kind of money flowing in there into those stocks. That has also had, as well as some of the geopolitical events, that has had a knock-on impact on the dollar as well. Okay, so we still see that strength. And it's almost as if like the world is like a jumbo jet. All right, the world economy is a jumbo jet, and it's flying on one engine at the moment, and that engine is the US economy. Yeah. China's stuttering, Europe's stuttering. Okay, the rest of the world emerging markets stuttering. So it's a case of you've got to make a decision where you're going to put your money. Your money's going to go into the US, and that is then having that knock-on effect, as you said, into individual stocks. And so we are seeing stock prices, okay, certainly on some of those big major stocks that we see on the NASDAQ, we can just see that the share price has been amazing, absolutely astounding in terms of the performance that they've delivered. And as you saw there, but we looked at Tesla. Tesla is just a fascinating case in point. Okay, my personal view is that Tesla stock trading at the moment is a bit like cryptocurrencies were 2 years ago. Sort of 2 years ago. It is now kind of it's become that kind of it's gathered its own momentum, and of course that has just drawn in lots of people who are interested to trade it, and we are seeing that reflected in the share price. And I'm sure when we look at some charts, but we can talk about that.
And I think it's interesting as well, actually, because if you look at the cryptocurrencies, people weren't necessarily buying it based upon what the actual technology was doing at the time. It's about the vision of it, it's about the narrative, the story. And people love the narrative of Elon Musk and what Tesla is actually trying to do with climate change right now, massive move into electric vehicles. But I think it's important to put this into perspective as well. Like you said, just before, when I camp onto the point, you said, what are fund managers doing right now? Where do they put their money? And I think when you're start out trading, it's important to understand how the market operates. If you think about most of the investors in the stock market are going to be your fund managers, your pension portfolio managers, and things like that. They need to put money somewhere to make a return, right? That's the trillion-dollar industry. And again, like you said, US indices are providing that right now, as well as some individual stock plays. And yeah, Tesla, I think, is interesting because, like you say, with cryptocurrencies, there's a bit of a hype right now, okay, with the whole electric vehicles. And I've been speaking to some junior equity fund managers, and some of them from Morgan Stanley. The big debate right now is with Tesla is it a tech company or is it a auto company? Because it's an auto company, okay, but if you think about the electric vehicle market, I mean, it's only 2% penetration globally right now. I mean, it's very, very small, okay? But the company is trading as if it was a technology company. And I think that's probably the difference going on right now. Massive debate going on. A lot of institutionals are, I believe from what I've been hearing, are valuing it or thinking of it like a technology company. And I think that has a massive difference in terms of the people who actually buy the market and what they're looking to do. Would you agree with that?
Yeah, I'd agree with you 100% there. Okay, it's people see the cars. Okay, people see the cars around the place, and so maybe their first initial thought is, oh yeah, it's an automotive company. Okay, along with Ford, Daimler, BMW, etc. The reality is when you actually look at what Musk has got, is the sort of all the pies that Musk has got his fingers in, and you look at what invariably Tesla's involved in. It's not just cars. Okay, there is batteries. Okay, there is tech. There's the space elements as well. Okay, to look at it as a purely just an automotive company is, I think that would be a little bit short-sighted. It is a tech company, and as that. It attracts tech-friendly individuals. Okay, people are excited by tech more so than pure automotive and stuff. So that attracts in itself the kind of crowd that gets attracted to Tesla as an investment or a trading opportunity. That's a very different crowd as well. So I'd agree with you 100% on that.
Yeah, and I think with it's interesting because actually. For those of you who have been following Traders Blog or any of the other webinars, I mean, even at the beginning of the year, I mean, I wrote a piece on Tesla, how it was the most shorted stock out of all the American stocks out there. And basically what that means is that more investors are bearish on Tesla's share price than any other American stock, okay? Out of all the public stocks traded out there, they're most bearish on Tesla. And a lot of beginner traders may have been hearing this term thrown around called a short squeeze. Could you explain a little bit more about short? I'm sure you've had a lot of experience with short squeezes over your sort of lifetime of trading.
Yeah, absolutely. This might be an opportunity to show a chart if it's possible. If that will help.
Definitely.
Let's see if we can do it on the tech, because I can give a kind of bring up a chart, because it just makes it a little bit easier to explain, doesn't it, for new traders? So here we go. I just bring in this here. Right, if we get the tech here, I should be able to hopefully just. Can I just share my screen? I think, and hopefully.
Yep, something is starting to come through.
Is that there we go, hopefully.
Perfect. Yeah, the Tesla weekly chart here.
Yeah, there we go. It's a weekly chart here. So it's just this is looking back to last year, and really, I'm just going to move this out of the way so I can just give it a better chat. There's a case of, for a good while, right, Tesla was just bouncing away there between about sort of 250 and 250 to sort of 390 price, okay, for almost like 2 years, two and a half years. And I was starting to get interested in it myself. It was really actually back here, okay, around May of last year, when in fact, we broke to the downside and actually started to move south on Tesla, and invariably that attracted an awful lot of bears. That attracted an awful lot of short sellers who thought Tesla was done. You may remember from that time, Elon himself wasn't helping himself. Some of his behavior, some of his statements were just adding to that kind of almost that.
That's right. It was a time
sentiment.
he was high on the Joe Rogan podcast.
That's right. Yeah, he was making comments about how he was going private. He was making his behavior was kind of almost adding to that sentiment that he's lost the plot. Here we go. Tesla's going to nothing, and actually price drifted back down. Okay, down to about, I think it's about just under 180 last summer, and then we saw this is basically an area demand. Price did an engulfing candle there on the weekly chart. The people were still short, but actually, as you can see, price effectively just it's just powered on up since then. And I looked here. Let me just see if I can zoom in here a little bit, and it's a little bit because of the price shakes. Invariably the chart looks a little bit skewed, but that's just because the name of the price. But back here about November time is that is when he announced the truck. Okay, the new
autonomous
Tesla
truck. Yeah,
that's it. The new Tesla truck. Okay, and you can have your own personal views on the aesthetics of that, but the truth is, the price action looked as if the initial response was negative, shall we say. People weren't overly impressed, and the kind of those people who'd been short were thinking, well, maybe this is the sort of the thing that kind of that sort of brings back that short trend in play. But as everyone could see, that actually it was not the case. And once it broke those kind of recent highs the last couple of years, it's really just been one-way traffic over the last 2.5 months. It's been quite shocking. So
and I think even at the beginning of the year, and even last year, Tesla was the most shorted stock, so most people were bearish on it. And basically, going back to what we were talking about before with the short squeeze, it's basically where, because so many people are short on this market, and now suddenly, if you think of the narrative there, Tesla were also missing their delivery productions as well. Right. So the news was coming out that they were missing their delivery productions. There were some financing issues with the Shanghai factory. So we had all these little news announcements, which is going to cause people to think, oh yeah, this has got to roll over, right? We've got to short this stock. And then suddenly they had a blowout earnings report. Suddenly they got the financing for the Shanghai Gigafactory, and the Chinese are actually supporting them. Suddenly there's this whole thing about fund managers wanting to invest only into ESG companies, so environmentally, socially, governance companies as well, which Tesla ticks all those boxes. So suddenly everyone who's short is now thinking, crap, I need to get out of this trade, right? I'm on the wrong side of this. Yeah. So it's hard to know, isn't it, whether this push higher is people buying the market or actually people unwinding their short positions. Because it's still actually the most shorted company in the US, even after this phenomenal rally. There's just still bears out there. And I mean, what's your advice to a lot of beginner traders? Because there's a lot of mixed reports, isn't there? You see articles, most shorted company, that they're not going to be able to compete with VW and Ford once they get into electric vehicle market. But you've got this stock which has doubled already this year.
Yeah, it's it kind of comes back a little bit to that case of you trade what you see, all right, and a case of it's always that thing of the trend is your friend, all right, until the end. And but what I'd be saying now is a case of, if you just look at how that price has responded in the last couple of weeks, I'd be saying that that price has almost gone parabolic. Okay, once price goes vertical, that in itself is normally a question that, in terms of a trading style, it's a case of we're getting towards like an exhaustion blow off, and I think that's what we saw. That's what we saw kind of the last week or so. Is that a case of there was good. I think there was great numbers out again at the end of January in the Q4 earnings, and that gave it another bump, but but it has not been able to. I don't think it's been able to sort of outrun the sort of the coronavirus impact. And if you just look at the price action there, okay, over the last week, even though the daily charts are going down, my own view is that it went a little bit Icarus. Okay, it flew a little bit too close to the sun, and it dropped away. And I think last week even the SEC had to bring in that rule to a one, didn't it? Sort of had to stop short sellers on it because of the it dropped, I think, more than like 10% in a session. So the old uptick rule, which it's a long time since that's been pulled in. But if you look at the price action right this moment, the price action is enormously messy and choppy at the moment. Okay, so when it has been trending up nicely, you'd be a fool to fight that. You'd be a fool to fight that as a new trader. At the moment, I'd be a bit wary right at this moment because there's clearly just the price action is very, very messy at the moment.
And I think that's a lesson, isn't it? Once everyone is starting to look at it, it's probably not the best time for you to start looking at it as well, right? You want to be ideally involved in markets where people are quietly building positions in the background, slowly building positions, and then eventually, when the trend has developed, suddenly, it's on everyone's watch list. This has gone up 20%, 30%, and then you start. It's interesting, isn't it? Because then you start getting the news announcements. Then the media comes along, and then suddenly it's on everyone's attention. Now everyone's like, "Oh, maybe I should buy this as well." And then suddenly this is where we get that, big push to the upside as well.
Absolutely. I mean, if you were buyers, back last summer, then congratulations, you've had a great run. If you're coming to the party now, I would be very wary at this particular moment. Just looking at the price action at the moment, I'd be very wary. But if you were in from last summer, or then congratulations, well done. It's give yourself a pat on the back. New traders, just be very wary at the moment. Just look at the price action. It's definitely a case of it, you described it absolutely right there. Is it's a media darling, whether you love it or loathe it, it's getting attention, and that in itself brings certain behaviors that we see in markets time and time again.
Yeah, that increased volatility, which is it can be a nightmare for any type of trader, intraday or even end of day. I think one of the interesting things as well with Tesla is a lot of people are questioning, well, hold on, Tesla's going up. Maybe that's because of the electric vehicle situation. Lots of governments trying to deal with climate change by moving into EV. Should you be looking at VW? Should you be looking at Ford? Should you be looking at other car makers which are trying to get into the electric vehicle market, which if you think about it, they do have, they've got everything in place, haven't they, really? They've got the network, they've got the showrooms, they've got the manufacturing plants, but they just haven't had as much attention. I mean, do you think we should just think of Tesla individually, or do you think it's also worthwhile thinking, well, electric vehicles? What else can VW compete in that respect? Can another auto car maker? Because right now there's not a lot of competition, is there, either?
No, there isn't. I wouldn't consider myself as a sector expert. I'm just an old trader. But I would be looking at Tesla. I think Tesla is very different, as we said earlier, and I would be looking at it as the tech company. In terms of other sort of manufacturers and the kind of EV whole that element. Well, I mean, I can only talk from personal opinion. A kind of friend of mine is working on the EV car for Aston Martin. And they've pretty much pulled the plug on their EV offering. Okay, because of the battery technology, etc. And I think it's one of the reasons is that sort of the EU has kept Tesla at arm's length over the last couple of years, whilst they're basically trying to allow European car manufacturers to catch up with the tech. Undoubtedly they will. Does that mean that those companies like Daimler, etc., BMW would be good trades, good buys? It wouldn't be enough to get me excited. It wouldn't be enough to get me, to come off the sidelines. I can see Tesla as a tech play and the attractiveness. In terms of other automotive manufacturers, well, I mean, you only have to look at the share price of Aston Martin, or you only have to look at share price of a couple of the other cars to realize that actually that they are lagging Tesla. They're still laggards, and I for one wouldn't be getting particularly interested. But other people who would know that sector better than I, they may have a very different view.
Yeah, I think I would agree. It's a little bit too early just to see that. Yeah, I think April is going to be an interesting time. There are rumors that Tesla are going to announce some sort of potential licensing deal with their batteries, as you said. But there's some rumors around there. But you know what? Like you said, it's a darling, media darling right now. We're going to be seeing headlines left, right, and center, rumors flying around left, right, and center. As you said, the key thing is just to keep your head on, just follow price, follow your methodology, your strategy, whether that's indices, whether that's compelling individual stock plays. But I think the key thing is just to go, just trade what you see on the chart and try to forget about a lot of the noise, unless the noise is matching up with what you're seeing on the chart, right? That's the ultimate combination, the combination of technicals and fundamentals. So look, Paul, I mean, it's absolutely great to have you on the show today. Got to wrap it up here for now. So for everyone listening at home, hope you found that to be of value. If you do have any questions or any comments, please put it on the YouTube recording, which will be uploaded to the Out of Markets YouTube page a little bit later on. And we are back next week, actually, with Marcus. So it's going to be another interesting show, same time next week on Tuesday. And I'm sure we're going to get Paul back on in the future as well. Really interested to hear some of his insights in the future. So Paul, thanks very much for being here today.
My pleasure. My pleasure.
And everyone at home, all the best with your trading, and we'll speak to you all very soon. Bye for now.